Welcome back. I hope you're having a fantastic day. It is February the 18th of 2022, and the markets continue their march downward as we are looking at a lot of uncertainty out there in the markets with the geopolitical climate and events around the world. So let's take a look at what's going on in the news right now. So all eyes are still on the Russia-Ukraine situation and the Fed. Those are the two big narratives that are driving markets right now. It's currently about 11 a.m. Eastern Standard Time. Markets are down. NASDAQ the most, 1.3. S&P down 0.75%. Dow Jones down 0.5%. And the big issue there is the markets are testing previous lows and major structural support, the traditional markets. We're going to take a look at that in 1 second. But again, the biggest issues facing the markets right now are the tensions with Russia and Ukraine. All investors' eyes are on that situation right now. As we move into the end of the week, we had some options expiration today and things like that that also triggered some price action. And we'll take a look at the markets here in just a second. But something else in the news is obviously the Bitcoin spot ETF. There's more and more pressure from members of Congress that they're putting on the SEC to approve one of these. So the SEC is still pushing back, and but getting closer and closer. So potentially by the end of the year, maybe going into the next year, we might see the approval of one of these, especially if they can get the Tether situation resolved and other stablecoin issues put to bed. And get more clarity and guidance on who regulates what between the FTC, the CFTC, the SEC, all of the different government agencies and bodies that are regulating banking, regulating commodities, regulating stocks and futures. So until they figure out who's going to be in charge of what and get all that worked out, I don't think we're going to see a whole lot of guidance. And then, of course, we have Biden's regulatory order coming out, emergency order to regulate crypto, and look into all that that's coming out as well, that was signed, and basically, trying to bring regulation to the industry, which again, at the end of the day, will be a good thing. We just need regulation to clarify the rules of the road and provide guidance for investors so that more institutional investors, corporate investors can get involved in the game and help provide a path moving forward. So let's take a look at traditional markets here. And like we discussed, the traditional markets are testing major market structural support here. Previous lows are being tested from earlier in January, where the market had the first initial drop, had a little bounce from there, and is now working its way. If the markets take out these previous lows, and they're all testing them, that was the Dow, this is the NASDAQ, and of course the S&P. If they take out these lows, then you can expect more continuation to the downside and a continued unwinding of all the liquidity, deleveraging of all the liquidity that's been pumped into the space really since March. Since the March of 2021 is when we've really been uphill, but this has really been going on since here's March of 2020, since really 2008 and 9 financial crisis when QE began and the low interest rate policy was put in place. But you can see it's just been straight uphill since March of 2020. And if you take general appreciation of the market in terms of normal 10% annual increases in price, you can see that the markets still probably have another 10-15% to go before they get back to normal levels. If you took QE in 2020, if you took all that $1 trillion worth of liquidity out of the equation, general market appreciation of the consistent upward trend that the market had before that March sell-off, and markets were bending upwards, had a lot of good momentum. The economy was strong prior to that cycle. Let's take a look at Bitcoin. Bitcoin's having a bit of a rough day right now. It's put in what is basically a higher low right now. You have your low of this this little area here, this local low that we just put in at 35,000 of this range that we're in. There's a higher low and now another higher low. So this would just be, depending on where this closes out today, If it holds this level in that $39,000 range, $40,000 range, that's going to equate to what's just another higher low on the daily. So nothing to panic about there, as long as it doesn't break down below this low that was set beginning of February at 36.8. As long as it doesn't take that low out, then things are okay. And you could still see a continued upward towards that retracement that we have been tracking and following. And I've been looking at a couple of different scenarios here in the price action of what we could be potentially facing and what could be going on here, kind of tracking these areas here and thinking, are we in this, uptrend of a retracement stage? Are we in this little stage here where we've got a little bit more downside to go, retest this 36 and move on? So with all the uncertainty out there, it's just really hard to know right now. Kind of all the technicals are out the door right now. All of the fractals and trends and patterns are kind of out the door because price is reacting to news. We can take a look at Bitcoin on the hourly here, and you can see it's just been up and down today. A lot of buying pressure when you get down to those $39,000 levels, kind of keeping price up around the $39,000, $40,000 level. And of course, all the altcoins, Ethereum and the altcoins are following suit. The markets are all joined together. All these assets are joined together at the hip. Some obviously have retraced more than others. Altcoins are still down quite a bit and getting back to their levels that they set earlier in January, back in after that original big drop that we saw back in January. So interesting opportunities being created. And until we get some clarity in terms of where things are going from a geopolitical standpoint, and from an economic standpoint with the Fed, we also have Fed board members that are going to be coming out and speaking a little bit about what they're seeing in the future. So as more Fed board members come out and express their opinions, market will get a little bit more guidance and clarity in terms of what the Fed's going to ultimately do in March. Again, they haven't done anything. All they've done is talk. They have not done a thing. So the market's kind of anticipating. And again, the markets can price in some moves on the part of the Fed, but what they have not priced in are the results of real economic events that we're facing, and the real economic headwinds, the real effects of inflation, the real effects of any kind of an economic slowdown, geopolitical threats, things like that. The markets have not priced all that in, and the effects of that. They can only price in the initial reactions to these events. And if Russia does invade, the markets will continue to sell off and drop a little bit. That's a technical thing that's just inserted into the algorithms. Depending on how bad the conflict is and how many countries get involved and how bad it escalates will determine how the effects and the impact on the market. So we'll just have to wait and see until we get there. But you have Fed members coming out and talking. President Biden's going to talk at 4 o'clock today, so the markets will close. And as I always say, the key is to watch the momentum into the close. So if the market snaps back at the close and either ends up or flat, that's a good sign. If the market dumps into the close, then that's just telling you where markets are and that they're more concerned about things going into the weekend. And we have a holiday on Monday for the United States markets. So you might see a little bit of selling like we did yesterday into the close, depending on the news and what's coming out about Ukraine. So, again, let's take a look at Bitcoin and some of the things that I've been tracking here. One of the things that I've been looking at are the moving averages, the 50, 100, and 200-day moving average. And generally, price wants to stay above, and on Bitcoin, price generally wants to stay above the 50-day moving average on the daily. Whenever you lose that 50-day moving average, you go down to test the 100. If you lose that, then the 200 is your last line of defense. And when price is below 200, that's never good. You're always way more bearish, obviously, under the 200-day moving average than you are when you're above it. And right now, price is playing with that 50-day moving average. Bitcoin came up above, found support, bounced, and then ultimately today has lost that 50-day moving average again. And you can go on to the weekly and take a look at the weekly. And the other thing is, on the weekly, whenever you lose the 50-day moving average on the weekly, you'll go down and test that 100. And if you lose the 100, you're going to go down and test or touch the 200-week moving average. And right now that's around 20,000, which is also your previous market cycle high right here. So if price loses the 100-day moving average, then it's going to go down and it's going to touch this 200-day, because that's just what it's done pretty much every time in the cycle of Bitcoin. You can go back and look at anytime it's broken that 100, it's gone down and touched that 200-day moving average. Even, the 50 and the 100, same thing applies. Here's 2017, 2018, broke the 50-week first, then the 100, and then ultimately went down to that 200 and stayed down there for a good while. Same thing with the March pandemic situation. And you can go all the way back to 2014, same thing, broke the 50, tested the 100, broke that, stayed down on the 200 for a good little chunk of time there. So every time it has broken the 50 and the 100, it has gone down to touch the 200-day moving average, or 200-week moving average. So right here, you found support back in June, July, and then moved into the retracement, found a little bit of support on the 50-week, lost it, went down, wicked down to the 100, bounced. So now we'll see if price is going to move back to this 100, which is at the $33,000 level. Depending on where the time puts it, it could be at 34, 35,000 by the time it gets down to this area to test it. And then if it holds, it could be, onward and upward from there. If it breaks, then it's going to go down and touch, like it's done in the past, that 200-week moving average. So those are kind of the things I'm looking at on the moving averages. We've looked at the Gaussian channel in terms of what happens when we play with the midline of that Gaussian channel, and price has been rejected off the midline after breaking through, coming up just barely above it. It's rejecting that. And whenever that happens, you can go back and check the history. It always goes down to these lower levels of the Gaussian channel and kind of checks the bottom, goes below it sometimes, and gets caught down in this, bearish cycle for a good number of weeks. This is the weekly time frame I'm looking at here. So those are the things to just kind of keep an eye on. There's a lot of uncertainty out there, obviously, with what's going on. And until we get some certainty and guidance from the Fed in March, what they're going to do, and more particularly with the Russia-Ukraine situation, markets are just going to continue to do what they're doing, and they're going to continue to react. As you can see, tracking here on the hourly with the Dow Jones, getting closer back to that previous low that was set there. The NASDAQ is the closest to breaking previous market cycle lows. S&P is getting a little bit closer too, but NASDAQ is leading. Of course, tech stocks are the ones that have taken the biggest beating. A lot of these tech stocks, let's look at PayPal, are starting to look like altcoins that have taken a beating here recently. If you look at this PayPal chart, that's just crazy right here. And a lot of these tech stocks are getting back to their March 2020 levels during the pandemic. This is the March 2020 low right here. So when you look at a lot of these, like PayPal, let's look at Facebook, isn't quite there yet, but Facebook has taken a big beating. And yeah, Facebook's down to that level of March 2020 as well. So Facebook, PayPal, let's look at Zoom. Zoom is another one that's taken a big beating. So a lot of these look like altcoins that just kind of pump and dump here. And that just goes to show you, let's just look at the triple Q, take a look at that. This one's kind of holding up a little bit better. And then if you look at the NASDAQ 100, let's see what the NASDAQ 100 is doing. NASDAQ 100 is, dancing all over the place as well. So I'm going to take a look at this again. The tech stocks are the ones that have taken some of the biggest damage here in recent weeks. A lot of talk about Cathie Wood and her situation. Here's the NASDAQ 100, and a lot of her stocks being down. And she says that, the tech stocks, her stocks are in deep value territory, which is when you want to be buying. And you don't want to be buying up here at all-time highs. You want to be buying once they've sold off a little bit. And once the rug was pulled out from underneath the markets from the Fed, there's that March 2020 low right back here on this NASDAQ 100 ETF, March 2020 low here. So you can see it's working its way back down to these levels. And then if we look at ARK and just kind of see what the ARK Innovation ETF's done, this one's unwinding itself as well, back down towards that March 2020 low. And it's just a tough time for these stocks. And, they will snap back at some point. But the question is, how far are they going to snap back? We just don't know yet. We'll just have to wait and see. Let's look at Netflix. That's another one that's taken a big beating. And these charts are just looking ugly. Here's your March 2020 low right here. So Netflix is just about back to the March 2020 bottom, which was the pandemic. So a lot of these stocks are completely unwinding back down to the levels that they hit at the March 2020 lows, which is just kind of crazy to think about that. But when you pull the liquidity out of the market, and when the markets know that the Fed is not going to be there to keep injecting the liquidity into it, they've got to unwind that, get some cash on the sidelines, and be ready to pump the markets themselves with all of the profits that were earned, compliments of the Fed. So that's kind of where things stand right now. I will keep you updated if anything happens in terms of escalation with Russia, Ukraine, any kind of events in the markets, things like that. But remember, watch the markets into the close. The momentum into the close is going to give you a lot of insight and indication in terms of what you can expect moving forward when markets reopen. Crypto obviously trades 24/7. So the crypto markets will be trading all weekend. Might be a tricky time over the weekend to do anything with crypto, depending on what's going on. So until then, I hope you have a fantastic day, and I will see you on the next video.